Hello, everybody. Welcome to Tuesday. The S&P 500 was down 4.3% today. I'm really glad that we make these defensive moves a few weeks ago because it's looking quite good right now. We moved 18% of our stock market exposure into T-bills and ultra short-term bonds, which did fine today relative to the market. And so, there's some good news in a way because we had a big run up and we basically just gave that back. We had four very strong days in a row upward, and we've given back almost all of that. We still have a little bit left. And really, that run up was participated on the concept of, hey, inflation might be lower than expected when it's reported today. It came out higher than expected. We had 8.1% as the expectation. We came in at 8.3 for the top line inflation. Core inflation, when we take out food and energy, was actually up to 6.3. And that's the first time core inflation's been up in the last 5 months. So that was actually fairly significant. And so inflation is very sticky here. It's going to be very difficult. The Federal Reserve, is probably going to raise 0.75%. Now there's talk about 1% increase next week. So we'll see how that plays out. And of course, then the market worries with this kind of strong labor market and this high inflation that we have a situation where the Fed might continue to have raised rates so aggressively that eventually it creates some kind of a recession, which can affect earnings and bring down the stock market further. So as I mentioned before, when you're standing on the edge of a cliff with the stock market, it's really good to have a parachute. And so, we've already put 18% of the stock market exposure into that parachute. That helped today quite a bit. We're going to add another 26% to that parachute tomorrow. We got a sell signal on our S&P 500 pieces. We don't sell things that have huge gains as far as that goes. We don't sell some of our legacy pieces. But as I get triggers on these other pieces, we'll continue to get more conservative. I'd like to have, a soft landing for ourselves if the market does come down hard by having this nice parachute and having these pieces in this treasury bills or ultra short-term bonds give us a chance to go in and buy pieces when the market does start to bottom out here, whenever that is. And so you got to have something for that. And we've already got some. We're going to have some more. So again, we've got a plan. We're watching out for the money. We're trying to be careful. If you got holdings that you're dying to keep and you've told me about them, we're not selling those. And if you have big gains, we're not selling that either. We're kind of capturing some losses here and some smaller gains as far as that goes. And obviously everything in the IRAs and those types of things, we don't have to worry about the gains. So we're just making those moves. So anyway, that's what's happening right now. Look forward to being able to see what's going to happen tomorrow and what kind of follow through we have with today's move. So talk to you then. Thank you very much.